All right, what kind of investment property do you want to find? Well, you got to ask yourself a question. Do I want to focus on appreciation or do I want to focus on cash flow? Hi, I'm Jim Fong. I'm an investor and realtor in Las Vegas, and I help clients and investors like you find the best investment properties, all right? And in today's video, we're gonna talk a little bit about appreciation versus cash flow, all right? In Q4 of 2022, we've seen a lot of changes in the real estate market, all right? We saw, the fastest growing appreciation, and now the interest rates went up. Now prices are crashing back down to earth now, right? So this provides such a great opportunity for investors like you because let's face it, earlier this year, it didn't even make sense to buy a property because prices were so high, and now prices are coming back down, which creates buying opportunities for investors like you and me, right? So let's first talk about identifying and determining what your strategy is for buying in a down market, right? So it always comes down to appreciation or cash flow. Let's start with appreciation first, all right? So with appreciation, that strategy is basing the fact that you're buying a property now and you're hoping that it will go up in value over time, all right? It's definitely a long-term strategy. It's not like a flip where you get paid right away. It's definitely you're buying, you're holding, and then when you finally sell in the future, it's gonna be worth a lot more than what you bought it for, all right? And you might not sell it, you might do a 1031 exchange or do some other stuff with it, but the whole strategy is I'm buying and I'm holding, all right? The goal is, even if you're financing, all right, you want your mortgage and all your holding costs and expenses to be covered by the rent you collect, all right? But your main goal is not to get extra income from it every month. The goal is to set it and forget it and just watch the value go up, all right? That's the whole strategy with this one, all right? One of the things that you'll find when using this strategy to invest is you're probably gonna start focusing on higher end areas, all right? So maybe prestigious areas or hard to get in areas or good school zones, things like that. An example for the Las Vegas real estate market is like focusing on Summerlin or maybe Henderson, Green Valley, Seven Hills, those areas, right? Like these are areas that are gonna hold their value over time and should rise in value over time as well too. One of the advantages of this strategy is you're probably gonna have higher end tenants if you're renting out the property, right? That's generally better, like when, if we hit a recession or something like that, chances are you're gonna have, hopefully you'll have tenants that will keep paying rent, right? One of the disadvantages of this strategy is you're focusing very long term, all right? Your whole strategy is based on a long-term goal, all right? For it to increase in value over the long run, right? So you're not gonna have a lot of cash flow with these type of investments. As I mentioned before, you're buying a property and you're just hoping that it's gonna go up in value over time. You just want your costs to be covered now. So it's not gonna give you more money to spend every month. It is definitely more of a balancing thing for your portfolio, more or less. You're investing in it every month, it goes up in value, all right? That is appreciation, all right? Let's change over to cash flow now. If you wanna talk about the cash flow strategy, this is a method where your whole goal is to increase your revenue and income every month, all right? You want the highest return on investment on a monthly basis now. So you're not looking 5-10 years into the future, you're talking about how much more income can I get off this property per month now, all right? It's not quite a short-term investment strategy, but it is very focused on the short term. Then that's your monthly income, all right? So an example of someone who's focused on cash flow is someone who maybe will buy multifamilies or fourplexes or things like that because, you can buy a fourplex, rent out all the units, you're gonna have good revenue from it, all right? Problem with this is, 5-10 years in the future, this property may not go that much higher in value over time. It's gonna be dependent on what rent you collect on it, more or less, all right? So the advantages of this cash flow strategy is you're gonna make extra income every month to spend or invest in other things, right? The disadvantage is they usually don't have the best appreciation, all right? So that's, do you want it every month? a little bit every month, or do you want it way down the line with the appreciation investment strategy, right? That's the question, all right? I mean, it really comes down to how many properties do you have in your portfolio? What do you really need, all right? If you want more income, let's focus on that. If you are doing fine on income, you make plenty of money, and you just don't want to pay more taxes, but you want to build your assets and your net worth, then the appreciation way is probably a better way for you to go, all right? But just remember that during economic downturns like recessions, and especially downturns in the real estate market, create the best opportunities for investors like you to really acquire properties and, you know, really have higher return on investments too during these times. So keep an eye on your market, or if you're interested in Vegas, please reach out to me. Would love to connect with you. Thank you for watching the video. Please subscribe to the channel, and if you like videos about investing in real estate, check out some of my other videos, right? Thanks for watching.